The importance of having good credit scores. I want to talk to you guys a little bit today just about the basics of why it's good to have a good credit score. A lot of people don't take it too seriously. They don't think it's that important, and it ends up biting them in the long run. I have half the people who come to me urgent to get something done, and then the other half are just kind of give up on their dreams of getting a brand new car or a new house because they think it's going to take too long, or it's too expensive, or it might just not be worth it to them. And so what we want to start getting out there is just some basic advice about how important it is to have good credit scores and what it can do for you. So what are credit scores? According to credit.com, credit scores are created by taking information from credit reports and analyzing the data to forecast how someone is likely to behave in the future. By looking at factors like how much debt consumers carry and whether or not they pay their bills on time in the past, it can help predict whether this person may pay a new bill on time or how they will handle a credit line increase. So basically, it is just a score it's calculating the risk on whether you're going to pay a debt back on time or not. What is a good credit score? Well, scores range from 300 to 850. A really good score is anywhere from the mid 700s to 850. Very good score, 720 to 760 will get you anything you want at a very good interest rate. An average score is somewhere in the upper 600s to the lower 700s, still pretty good, better than most. 620 to 680 is fair. In this range, you're going to be able to get approved for a house, a car, a credit card, but the problem is your interest rates are going to be high. This is where the lenders want you to be at, because this is where they make you feel like they're doing you a favor by approving you, but in reality you're paying a really high interest rate and they're making a lot of money off of you. They still know that more than likely you're going to pay your bills on time because you're in the 600s. If you weren't paying your bills on time, you wouldn't be in the 600s. So they're pretty sure you're going to pay your bills on time, which is great for them, but they're also getting to charge you a high interest rate, which is not great for you. And then anything below 620, you're going to need some help. You're going to need to start building some positive payment history and get rid of some of the negative on your credit report. How are credit scores calculated? According to my FICO, this is just what just about everybody I've ever come across uses to have an idea of how scores are calculated. 35% is your payment history. Are you paying your bills on time? Do you have any late payments? Do you have any collections, any judgments, anything that shows that in the past you've not paid your bills on time in one way or the other? 30 days late, anything over 30 days late on any of your bills, it'll show up on your credit report as late and it'll ding your credit score. 35% of your score is made up by that, so it's the biggest portion. 30% of your score is made up of how much money you owe. Think about your car payment. Credit card debt really is a big one because that's what fluctuates, so that's what can make your score fluctuate. Some of those are necessities. Having a mortgage and having a car payment, obviously 90% of people in America probably do, but credit cards are a big thing that can affect your score. Keeping a high balance on your score, keeping it over 30% really will lower your credit score, so keep that in mind. 15% is your length of credit history. Now, in some cases, for some of us, we're young and there's just not a whole lot we can do about it. All you can do is get a credit card or a car payment early on in life and pay it on time and pay it for as long as you got it. For a credit card, you want to get one of those as early as you can. Never miss a payment, no matter what you got to do. Pay it on time and keep the balance low. If you do that for an extended period of time, your credit scores are going to be very good. If you have a perfect payment history, you keep your balances low, but you don't have a long length of credit history, say you're in your 40s and you just never really took credit cards seriously, so you don't really have a long, lengthy payment history, it's going to keep your score down. Anybody you see getting up in the upper 700s or the 800s, those are people who have got a long, positive payment history. They've shown over an extended period of time that they can pay their bills on time, no problem. So it's important. Any adult, get a card now, use it forever. Don't ever cancel a credit card. Don't ever cancel a credit card. Just if you don't want it, pay it to zero. put it in a drawer somewhere. And then once a month or once every 2 months, go get, a pack of gum and then pay it right back off and then put it up. Don't get yourself into trouble with it. But it's important for your credit score to always have an open account, several actually, which kind of falls into the next category, which is 10% of your score is having a healthy mix of credit and use. It's considered as your mix of installment loans and revolving accounts. Installment is a bank loan, like a car payment, mortgage loan, things like that. A revolving account is a credit card, something that doesn't end unless you cancel it. It's always going to be open as long as it doesn't get canceled on you or you don't close the account down. What they want to see is that you can handle different mixes of credit, that you can pay your car payment on time, your mortgage on time, and your credit cards and your revolving accounts as well. A good healthy mix is having 3 revolving accounts for every 1 installment loan. Okay, and so if you got a car payment, then having 3 credit cards, according to FICO, is the perfect healthy mix of credit. It really shows that you know how to manage your accounts. And that falls into the last category. 10% of your score is basically inquiries. Every time you go apply for a credit card or a car or a loan, furniture, financing furniture, it dings your credit a little bit. Okay, it's a necessary evil. Everybody's got to have, positive accounts. Like I said earlier, your scores aren't going to go up. But the reason why they do it, it's the most frustrating one. The reason why they do it is because they want to make sure you're not desperate. If you're applying for loans all over the place, all over town, it shows you're desperate for money. And so this is kind of the only way they have to know that information and to beware for future lenders to know, hey, this person obviously is in big trouble and they need a loan. So that's kind of a risky situation for them because maybe we don't want to give them a loan knowing that, they might not be able to pay it back. Good news is inquiries don't stay on your credit report very long, so it's just kind of something you have to do. You want to be careful. You want to know what your scores are before you go in and apply somewhere, and you want to have an idea of what their requirements are so that you already pretty much know if you're going to get approved or denied. Okay, you obviously never want to go in and apply for a car payment or a mortgage or a credit card if you're not sure if you're going to get approved. You should never have an inquiry on your account that you got denied somewhere, because you can be smarter than that. You can call ahead and say, hey, what range of credit scores are you guys needing? And then you go pull your credit report up online, privacyguard.com, myFICO, whatever, and see if your scores are in that range. If they're not, it's not the time to go apply, because everybody kind of falls under the same regulations, and it's not like somebody's just going to be nicer at one credit card company than another and go ahead and give you the card if your scores are in the 500s. So just be aware, be smart, and you won't have any unnecessary inquiries. And again, after a year, they really don't affect your score, and after 2 to 3 years, they fall off your credit report completely. What score do I need to get approved for a home loan? In most cases, you're going to need a minimum credit score of a 640 in order to get approved for a home loan. In some cases they'll take lower than that, but again, they're really taking advantage of you. You're going to pay a really, really high interest rate, and your monthly payment on your house is going to go up, and your overall amount that you're going to pay over the house over the 30-year loan is going to be a lot higher than if you would just sacrifice for a little bit longer, get your credit scores up, and then go apply for the home loan and get a much better 3%, 4% interest rate, and it'll save you a ton of money on your house. Now, why this is really important, most people don't get it because they think short term and they just want to get into a house today no matter what. If you have a really high interest rate, your monthly payments are going to go up. So what does that mean? That means that you are going to get less house for more money. If you're planning on spending $1,500, $2,000 a month on your mortgage payment, but your interest rate is making up a huge portion of that, then you're going to have to, the amount that you're going to be able to get a loan for is going to be less. So you're going to be getting less house for more money versus getting the absolute lowest interest rate you can possibly get and getting a more house, because your interest rate, that part of your monthly payment, is low, so you can add a little bit more on to the actual paying on your mortgage portion of your monthly payment. Okay, so 640 is the score that you need to get approved. However, I have seen people that are at a 640 around that area, and they have a judgment, tax lien, some things on your recent bankruptcy even. Rarely do you have those things and your score is above a 640, but it does happen. And if loan officers see some of those things and they're somewhat recent, they will still deny you. So that might still be something you need to call us or a company you trust to get off of there, and then you'll be good to go. And it usually doesn't take too long. Interest rates. Credit scores determine the interest rate that you will receive when you apply for a loan. The interest rate that you get will determine what house or car you can afford. So same thing. You go to a car lot, you're wanting to buy a brand new, Ford F-150, and you end up leaving with a Mazda Miata, or, not to offend anybody, just some kind of car that wasn't your ideal car situation. Not because you couldn't afford the car necessarily, but because your interest rate was so high, 18, 19, 20%, that it ended up taking you out of the range that you could have afforded to get a brand new nice car. There's people out there driving around in an extremely nice luxury car, Mercedes, BMW, and they're paying a less on their car payment than people driving around in a Honda or something that's technically supposed to be a cheaper car. I see it all the time. I see people with $700, $750 car payment, and their car's not worth, $10,000. And so interest rates play a huge portion on the kind of life that you live and the kind of stuff that you're able to buy. So that's really where credit is most important, because it can totally change your life if you keep your scores high and your rates low. Credit cards. Having excellent credit scores opens the door to be able to get high credit card limits that you can use for vacations, for Christmas gifts, in case of emergencies. There's no better feeling in the world than having $20,000, $30,000 available to you on a credit card. For a last minute vacation, you wanting to buy your wife or your husband something nice, or if an emergency comes up, something happens to your car, whatever, you can get by. Okay, emergencies, stuff like that happens every day. Credit cards will help you sleep at night. If you have low balances, and you have a high credit limit, you're safe. There's nothing that can come your way that's going to keep you from being able to handle the situation that you're in. It really will help you sleep at night. You have to be careful, obviously. You don't want to carry high balances on your credit cards. You can really get yourself into trouble. It's not a replacement for income. You should never use a credit card to live beyond your means. You should always be able to pay it off every month. You don't necessarily have to pay it off every month. You want to keep a balance below 30%, but you need to know that you have enough money in the bank to pay off the credit card, just in case an emergency happens and there's not income coming in. So you lose your job, or you get really sick, and you're not able to pay those credit cards. That'll get you in big trouble really quick. But having good credit really opens the doors, and it can change your life through credit cards. They can be your best friend. Final thought. Having good credit is extremely important. It can change your life and put you in a much better position throughout your life. Getting low interest rates will free up money that you can invest in the stock market and real estate and whatever. Just having extra money to save for college funds, for cars, for your kids' cars, for everything that is going to come up in life. Paying low interest rates is just putting extra money in your pocket. If you have any questions, you can give me a call. Our office number is 214-307-4946. Be glad to answer any questions. It's not going to cost you anything. Don't be afraid to call in to get more information. It doesn't necessarily mean that you have negative information that you need me to get off of your credit report. We can do that too. But if you have more questions about how to build positive payment history, if you have questions about if your interest rates are good right now, if you should refinance, if you do have negative information on your credit report that you'd like us to take a look at and make a game plan to help you get off, we offer really good deals. I'm sure everybody says that, but it's true. You can call and find out. Or if you just want more general information, go to our website, www.lendersccs.com or www.lenderschoicecreditsolutions.com. We got a brand new website that's being built right now. It should go live here in a couple weeks. I'm very excited about, and when that happens, I'll let everybody know, because we're going to have so much good free information on your credit or on our website to improve your credit scores that you might not even need to call us, because it'll all be there on the website, and anytime you have a question, you can go to our site for a reference guide. But anyway, there's the number. If you have any questions, please give me a call. I'd be glad to help you out. Thank you so much.